Well, the Nasdaq down about 1.5% here, with tech shares continuing to come under pressure. This comes after Microsoft and Alphabet reported earnings. Both beat overall earnings estimates, but did not beat investors' lofty outlook expectations, it seems, sending overall tech stocks lower. For more on how you can diversify your portfolio with Mag 7 exposed ETFs, as part of our ETF report brought to you by Invesco QQQ. Let's bring in Cinthia Murphy, ETF Think Tank Director of Research here. Cinthia, the Mag 7 certainly been a very popular trade when you think about ETFs. What have the fund flows been like as we continue to get these quarterly results from the big names?
Yeah, Kiko, it's been like in the last year or so, investors can't get enough of the Mag 7, as you well know. A lot of money has gone into everything from your big classic tech funds, your QQQs of the world, and into like more the AI focused type of strategies. It's been like anywhere you find some of these names, your NVIDIAs, your AMD, your Microsofts, Apples, the money has gone there. So far in 2024, we're starting to see a little bit of a pause there, a little bit of a hesitation because there feels like there's a little bit of uncertainty on what this looks like going forward. But appetite has been strong for these names, as you know, across ETFs, across just the stock market directly, anywhere they can get their hands on them.
So Cinthia, as we hone in on AI, I mean, you have some of these that are pure tech ETF plays, you have some that are more sort of AI as a theme, but include different pockets of things. And then you have some of these companies that are almost planning on using AI as a co-pilot to fuel their business growth. What are some of the ones that you like as you dig down into some of these different segments?
So what's interesting about the AI space is it says there's so many ways to tackle it. AI as an investment theme, like you actually want to capture that AI innovation, the disruption. These AI funds come in many different flavors. Some are all robotics, some are broader takes, and you can slice and dice this in different ways. What's been interesting is that since ChatGPT came out, about a year ago or so, all that hype, all that enthusiasm over the innovation in this space has really kind of cooled down. It's like we've gone from the hype to like growing pains, a little bit of maturity sinking in. But from an investment perspective in the ETFs, what has really worked well is concentration. So the more Mag 7 you have in your AI portfolio, the better you've done. Going forward, that may or may not be the case. Most market strategists are calling for diversification, be wary of too much AI exposure. So, as an investor, what you really have to do is take a look at what does that portfolio looks like. So, one of the classic AI battles is between funds like Robo versus Bots, which were the two first robotics focused ETFs. And they're a classic example of this because with Bots, NVIDIA is like the biggest holding. It represents so much of that portfolio exposure, where Robo is much more diversified, tilts much more, smaller cap. So it hasn't performed as well, but going forward, if diversification becomes the way to go about this, you ought to, look out for those kinds of things. How much are you concentrated on the top names? So these are the ways to think about this space as you look to invest.
Is that what you're advising clients, Cinthia, to not necessarily throw all your eggs in one basket, but if you are going to invest in AI broadly, maybe to diversify a little?
This is what we're hearing from people that we've been talking to. It is the call for diversification. Now, it's really tough to embark on diversification when you've seen the kind of performance Mag 7 has delivered. It's easy to want to bet on the winners big time. But, everyone we've been talking to this year is really cautious. We don't know what the Fed's going to say. We don't know what the environment is going to be for growth names. There's a lot of call for slow down on growth. Let's go into more cyclical sectors. If you look at forward PE earnings, these companies are so overvalued relative to the rest of the market. So, is there a period of consolidation coming? All of these things are suggesting, watch out for diversification. Make sure your portfolio is not heavily tilted just towards 2 or 3 names. It's all about risk management at the end of the day.
And speaking of risk management, I have to talk about spot Bitcoin ETFs. So now we have just obviously still early days, but at least some sense of some of the flows here that we're seeing. We're seeing Grayscale Bitcoin Trust seeing net net outflows of about $5 billion. Recipients, though, really benefiting from this, BlackRock and Fidelity. What are we seeing as this is becoming slightly more mature, even though it is still early days here?
Yeah, it's been a busy 2 weeks for these ETFs. I think no one is too surprised to see the outflows from GBTC. If you remember, that was a private trust before it converted into an ETF, so all that money was locked in there. And this is the first opportunity these investors have to really get out. And, GBTC costs 3, 4, 5 times as much as some of the other ETFs. So as an investors, we've seen some of that money get out. They lock in their profits and they may go to cheaper funds. We can't really relate one-to-one here. But, the ETFs that came out other than GBTC, they're so low cost. The access points are very low and easy entry. So we're starting to see money flow. The good news is outside of GBTC, all 9 ETFs have seen positive inflows. So demand is there. We also are starting to see who's emerging as category leaders. And maybe to no one's surprise, companies like iShares, Fidelity, the big box shops are leading the race here. But there's also interesting, momentum behind the more what we call the crypto natives, funds like Bitwise and ARK even is getting some strong flows here. So it's a space where so far everyone is doing well outside of GBTC. And but maybe hasn't been the blockbuster. We haven't seen $100 billion go into these funds in 2 weeks. So I think sentiment is a little more tempered, and we're waiting to see when does GBTC stop leading and how things settle down.
We'll certainly keep a track of that, especially as we wait the Bitcoin halving, of course, coming up in April as well. A big thank you there to Cinthia Murphy, ETF Think Tank Director of Research, for joining us this morning. Thanks so much.